Hey everyone, this is C Crypto Daily Buzz. Today is Thursday, March 12th, 2026, and this channel summarizes the most important crypto news for investors across Southeast Asia. We've got 6 stories packed into today's episode, so let's jump right in. Bitcoin fell sharply from around $71,000 back below $70,000 after 2 macro catalysts hit within hours of each other. First, the U.S. February CPI came in at 2.4% year-over-year, matching expectations, with core inflation at 2.5%, exactly in line with forecasts. The initial market reaction was muted, but the lack of a dovish surprise disappointed traders who had positioned for a softer print. Then the Bank of Japan delivered hawkish comments, with board member Takata calling for further rate hikes and warning of inflation overshoot risks. This strengthened the yen and triggered a wave of risk-off selling across global markets, hitting crypto especially hard. Over $500 million in leverage positions were liquidated in 24 hours, with roughly 90% being long bets wiped out on Binance, Hyperliquid, and Bybit. The CoinDesk 20 index dropped 6%, with Ethereum and Solana seeing heavy short dominance in derivatives. My take on this: the CPI number itself was not bad. Holding at 2.4% keeps the Fed on track to hold rates at the March FOMC meeting next week. But the BOJ factor is what caught most crypto traders off guard. Historically, Bitcoin has fallen 20 to 31% after each of the last 3 BOJ rate hikes, because yen carry trade unwinding pulls liquidity out of risk assets globally. For Southeast Asian investors, this is a reminder that crypto does not trade in isolation. Central bank moves in Tokyo can hit your portfolio just as hard as anything coming out of Washington. Staying in Japan, the government has finalized a major tax reform that cuts the maximum crypto tax rate from 55% down to a flat 20%. This brings digital asset gains in line with how stocks and investment trusts are taxed under Japanese law. The reform also introduces a 3-year loss carry-forward system starting in 2026, allowing traders to offset future profits with previous losses. Additionally, investment trusts that include crypto are now permitted for the first time, and Japan has already launched its first XRP exchange-traded fund with plans for more crypto ETFs. The change applies specifically to tokens listed on domestically registered exchanges, currently a curated list of about 105 approved assets. However, the favorable tax treatment comes with stricter oversight. Crypto will be reclassified as a financial product under Japan's securities law, bringing insider trading rules and mandatory disclosure requirements. My personal read on this: Japan was losing domestic crypto activity to offshore platforms precisely because nobody wanted to pay 55% on gains. This reform is a pragmatic move to bring that capital back onshore while simultaneously tightening regulatory control. For the broader Asian crypto landscape, this sets a template: lower taxes in exchange for stricter compliance. If countries like South Korea or Thailand follow a similar playbook, we could see a wave of re-domestication of crypto trading across the region over the next 2 to 3 years. Binance.US has named Stephen Gregory as its new chief executive officer, effective March 9th, replacing Norman Reed, who moves into an advisory role. Gregory's background is heavily focused on legal and regulatory compliance, a deliberate signal that the platform is prioritizing its relationship with U.S. regulators above all else. The leadership change comes at a critical time as the broader U.S. crypto regulatory environment continues to evolve rapidly. Binance.US has also outlined plans to expand its Earn product suite and build new gateways connecting users to decentralized finance and the tokenized asset ecosystem. Meanwhile, CZ himself publicly denied that Binance holds any market short positions, pushing back against price manipulation allegations that have circulated on social media. My honest assessment: the choice of a compliance-first CEO tells you exactly where Binance US sees its biggest risk, and it is not technology or product. The platform needs regulatory credibility in the U.S. market, especially after the settlement and leadership turmoil of the past 2 years. For Southeast Asian users who rely on global Binance, this matters because the health of the U.S. entity affects the brand's overall regulatory standing worldwide, including in markets like the Philippines, Thailand, and Indonesia, where Binance operates or seeks licenses. We still have 3 more important stories to cover. Let's continue. Alright, let's move on to the next three stories. European and Swiss law enforcement have dismantled CryptoMixer, one of the largest Bitcoin mixing services ever operated, seizing servers, the domain, and over $29 million in Bitcoin. The operation was coordinated by Europol alongside German and Swiss authorities, with raids conducted in Zurich between late November and early December. Since its creation in 2016, CryptoMixer processed over 1.3 billion euros, roughly $1.5 billion, in Bitcoin for clients seeking to obscure the origins of their funds. The platform was heavily used by ransomware groups, dark web marketplace operators, and cross-border money laundering networks. Authorities seized 3 servers, more than 12 terabytes of data, and the cryptomixer.io domain, which now displays a law enforcement seizure banner. Investigators say the seized data will generate new leads linked to cybercrime operations across multiple countries. My take on this: Mixer shutdowns like this are becoming more frequent, and each one makes the privacy versus compliance debate more urgent. For everyday investors in Southeast Asia, the practical takeaway is straightforward. Using mixing services, even for legitimate privacy reasons, puts you at risk of being flagged by exchanges and compliance systems. The direction of travel is clear. Regulators globally are closing the infrastructure that enables anonymous large-scale transfers, and that trend is not reversing. Asset manager VanEck has partnered with fintech firm Basic Capital to make its crypto ETF products available inside U.S. 401k retirement plans for the first time. This means American workers can now get regulated exposure to Bitcoin and potentially Ethereum through their employer-sponsored retirement accounts, using the same familiar contribution mechanics they already use for stocks and bonds. The VanEck Bitcoin Trust, ticker HODL, is expected to be the primary offering, with an Ethereum ETF product potentially following. Standard 401k features like employer matching and tax advantages extend to these crypto allocations. Financial advisors generally recommend keeping crypto exposure between 1 and 5% of total retirement portfolio value, given the asset class's volatility. My personal read on this: this is quietly one of the most important structural developments for Bitcoin's long-term demand picture. The US 401k system holds over $35 trillion in assets. Even a 1% average allocation across those accounts would represent hundreds of billions in new demand. For investors in the Philippines, Vietnam, and Indonesia who follow US institutional adoption as a signal, this is a strong one. Crypto is moving from trading accounts into retirement accounts, and that is a fundamentally different kind of capital commitment. Ripple has received expanded approval from Singapore's Monetary Authority to offer wider payment services using XRP and its RLUSD stablecoin under its Major Payment Institution license. The expanded license allows Ripple's Singapore subsidiary to provide end-to-end cross-border payment solutions, settling transactions in minutes rather than the days required by traditional correspondent banking. On-chain activity across the Asia-Pacific region has climbed roughly 70% year-over-year, with Singapore positioned at the center of that growth. The approval means banks, fintechs, and remittance firms across the region can now integrate Ripple's on-demand liquidity, or XRP-based settlement, into their networks with full mass regulatory backing. RLUSD currently holds a market cap of about $1.26 billion with nearly 80 million in daily trading volume. My honest assessment: this is directly relevant for Southeast Asia, especially for the massive remittance corridors between Singapore, the Philippines, Indonesia, and Vietnam. If even a fraction of the region's cross-border payment volume shifts to Ripple's rails, the real-world utility case for XRP becomes much harder to dismiss. The key question is adoption speed. Having the license is one thing, but getting banks and payment providers to actually switch from legacy systems takes time and trust. Still, MAS approval carries significant weight in this region, and other Southeast Asian regulators tend to watch Singapore's moves closely. Before we wrap up, here's a quick recap of today's 6 stories. Story 1. Bitcoin drops below 70,000 as 500 million in longs liquidated after CPI and BOJ shock. Story 2. Japan cuts crypto tax from 55% to a flat 20%. Story 3. Binance US names regulatory expert Stephen Gregory as new CEO. Story 4. Europol dismantles $1.5 billion crypto mixer laundering network. Story 5. VanEck crypto ETFs now available in US 401k retirement plans. Story 6. Ripple expands XRP and RLUSD payment services in Singapore under MAS license. This video is for information and education only and is not financial advice. All investment decisions and risks are your own responsibility. If this video was helpful, please consider subscribing, liking, and turning on the notification bell. For real-time alerts and trading signals, join our Telegram channel, link in the description. See you in the next one.